Good morning, traders and investors. My name is Shen Mwangangi, one of the best market analysts here at HFM. So, today we have CPI coming in, the big, beautiful CPI numbers. So, we understand that CPI is one of the most volatile news events because it is one of the major key economical indicators of whether to increase interest rates or not. And CPI is also an inflation indicator. So when we have hot CPI coming in, this means if we have high CPI coming in, this means that we have a lot of money circulating in the economy because CPI majorly measures the amount of food being bought, how people are spending on food, how people are spending on transport, how people are spending on bills. So if we have high CPI coming out, which is CPI means Consumer Purchasing Index, so it measures how consumers purchases goods and services. So if we have high CPI coming in, sorry for repeating myself, if we have high CPI coming in, it means high inflation, and if we have high inflation, it means possible interest hike, so as to reduce money borrowing. And the opposite is true. If we have low CPI coming in, that we may expect low inflation, and therefore it means cut in interest rates so that people may borrow money and continue spending in the economy. So this will be our major news that we'll be focusing on today. And coming on to the charts, of course, we're going to start with the dollar index because this is a dollar news. So coming on to the dollar index, it has been a trend where when we expect any major news event, first of all we will be in a consolidation. Then during the news event we break out. So during news events, if you're a trader, you'll be focusing on breakout trades. So you can see on the daily chart, majorly we are in a consolidation between 99.31 and 98.79. So a good move, a good breakout from either of the side, depending on the numbers that will come out on CPI, will be the direction that we will be looking at. If CPI comes out better than expected, it means possible interest hike, which will strengthen the dollar, and it means the dollar will move up. And the opposite also is true. If CPI comes weak, it means we will have a cut in interest rates. And if you have a cut in interest rates, it means that the dollar will become weak. Now, moving on to stocks. So for stocks, it's the opposite. Because if we have a hike in interest rates, it will affect stocks. So a high CPI means negative for stocks, and low CPI means positive for stocks. So on our key interest levels, the one that we'll be looking at this today will be 60.36.00. That's our key psychological level, and also 59.79.04. So we'll be mainly focusing on those key zones to see what will happen depending on the numbers that will come out. And the same on the US 100. What applies on the US 500 applies also on the US 100. A hike means bad for stocks, and a cut means good for stocks. Why? Because if you have a hike in interest rates, business will have a hard time borrowing money from the bank because we have high interest from the banks. But in the long-term effect, it's good for stocks, because in the long-term effect, it means if stocks are selling, they're going to be selling at a very good price and pricing in based on the amount, the rate in the dollar. So coming in today on the US 100, we have 22218.39 being our previous high, where we reached an all-time high. Then the tariffs came in and we had that form of downtrend. But you have seen a very good recovery on the US stocks and having a very strong uptrend with very minimal pullbacks, showing that in this trend, buyers are majorly in control, and we have confidence that we are back in business. So key levels I'll be looking at is the 22218 to the 39 to see if we're going to have a break on that level, and also 2156.32 to look at that level to see if we're going to have a break. Yes, but if I'm supposed to adjust my support zone, because we know a support or resistance zone, they are zones, they're not levels. So I'll be, at the moment, the nearest key resistance zone is at the 222046. So a good breakout on that level will be a good move to see also if we're going to target the all-time high at the 2221.39. In the Euro USD, we're also in a consolidation, and we are below our marked resistance zone at the 1.14247. We've been trying to break out and finding some form of rejection on that level, and right now we're just below that level, just testing it from Monday, Tuesday, and also today. We're just from testing it on the open, and it seems as if we're moving down. So key levels 1.13140 and 1.14247 to look for a break on either side, depending on the numbers that we're going to receive during CPI. On GBP USD, you can see we reacted from our previous high that we created previous weeks at the 1.35690. When we came there, we found that rejection again, and now we are moving down, and it's as if we are targeting our previous support zone at the 1.34260. On the USD JPY, we can see it's as if we're gaining strength past our support zone at the 144.120, and we're targeting now our next resistance zone at the 145.215. Yesterday, we can see we came to that level, had a slight rejection, and today we have opened strongly targeting that level. Remember, from every break, our confirmation number one is, do we have volume confirming that break? Because with every break, we have to see volume. Then number two, are we seeing high momentum candles on that break? An example of a momentum candle is like this one, where we had that large break, then we had some form of, between the first and the third candle, we had some form of an imbalance, showing that buyers have overwhelmed the sellers, and we came back to that level, trying to retest this level, but we still went up. So any form of break, look for volume as confirmation, and look to see if you're going to have an imbalance, showing that one side is stronger than the other. On the Audi USD, we can see we're just from breaking that form of resistance, which was at 0.64917. Again, this break is not a confident break for me. Why? Because at this break, we have to see some form of volume confirmation on the break. And when I can see over here down, we have zero form of volume confirmation. So this break, again, if you're a day trader or a scalper, make sure that you use strict risk management as you try to take this breakout move. But as for me, I will be looking for some good confirmation with volume and momentum candles to show me if this is a good move on the top side. Because why? I can see on the previous days, we've been having so much range, so much consolidations, ranging, then moving up, and this level we tested more than 4 times, 1, 2, 3, then another one, then having a break. First of all, we're testing this level, testing this level, then coming back down, testing this level, then coming back down, showing us that we had very strong form of sellers at this level. So if you're going to break, I want to see buyers coming in strong and overwhelming the sellers. So at the moment, I won't be looking at this move, but if you're a day trader or a scalper, you can be looking to break that move. Else, if you come back inside, it's a nice move to fade all the way to our previous support zone at the 0.63591. Then lastly, we have JPY JPY. We've been so many questions have been asked about JPY JPY. There's something interesting about JPY at the moment. JPY has been a country where we have zero interest rate, and when we got that form of where the JPY want to increase their interest rates from 0 to 0.5. Now it has influenced any form of JPY, any form of pair that has JPY. Why? Because if they want to take the interest rate from 0 to 0.5, it means they want to strengthen JPY. And remember, if they want to strengthen JPY, and JPY was the country where people will borrow money in the form of carry trading and take it to other economies so that they can get interest from that money borrowed, then pay back with zero interest. Now, if there is interest, now it's discouraging also investors from coming to borrow money at the JPY. So key levels I'll be looking here at the JPY will be at the 195.703, and at the moment you can see we're having some bit of rejection from that level, and our key or support zone will be the 192.540. You can see at the moment it's as if we have an up move having broken this high with the body on top, and at the moment you're having those previous rejection and we are ranging. So again, I'll be looking to have a breakout on that level to see if we're going to have some good form of move to continue that up move to target the 198.484. Else if we get that strong rejection, I'll be looking at the 192.540. So remember, this is purely educational advice. You can go and make sure that you go and do your due diligence, analyze the charts based on the strategy that you're using. Then you can also find your confluences based on the daily money market call that we do daily. So make sure that you can make sure also that you go to our YouTube page. Make sure that you like, subscribe, share, and also comment. Why? Because it will help us improve our algorithm so that we can create better videos for you as a trader and investor. That said, my name is Shen Mwangangi, one of the best market analysts here at HFM, and I'll see you tomorrow, same time, same place. Goodbye.